they are increasing on the credit side and decrease on the debit side, right? So you just have to determine or identify the list of your incomes or your I'm going to come to you just now, no Mazwazi, sorry, I can see your hand is up. So your items that falls under your liabilities are, for example, long-term loan and the debentures, and then items that falls under, or the creditors, the bank overdraft, and so forth. And then items that would go to your incomes is what the business normally receive, like your income, your rental received, your dividends received, and so forth. And then that goes through under your equity. You know, when you do a statement of changes in equity, I think I've elaborated that when we do what do you call it? When we did our first session, we said that you need to have an opening balance, which is your capital contribution, and then you're going to have your drawings, your net profit or your net loss, and then you get that part as your equity. Then you move it through to your statement of financial position. I'm not sure if those that are actually not sure of what could be the where does your incomes and your equity and liabilities increases and decreases. So the difference would be those two. So how you can go about that one, you can just draw up yourself what's called the basic accounting equation, and then you list down, you write down the list of all your incomes, so your expenses and assets, and then you write all the list of your income, liabilities, and equities. You just write them according to the way you understand them. And then as soon as you've written them down, then you have to identify which one increases on which one and decreases on which side.
Thank you, Puti. Maybe it'll also come up when Bonnie's showing us the transactions. I just wanted to understand if when you say that say assets increase on the debit side and decrease on the credit side. So what do you mean when they decrease on the credit side? Would that be in the bank account or in the actual expense or asset account? I think that's where sometimes I get confused to say, what does this actually mean? Are we saying it increases on the actual, say maybe we're looking at water and electricity?
What you're actually asking about is what are the effect of the transaction? Let's say we are dealing with an asset or we are dealing with an expense, all right? But what I'm trying to say is, if you're dealing with an asset and an expense, the opening balance would always be on your debit side. And then we're going to look at how are we going to move out of the transaction. It's not on whatever the additional information that is given for that specific asset or expense account. It might be on the credit side or it might be on the debit side, depending on how was it phrased out. I don't know if I'm making sense. But the initial opening balance of those two accounts, which is the expense and the asset, they increase on the debit side. So when you are given an opening balance, let's say on the trial balance, and then they give you the London building, for example. So they give you the figure. So what you're going to do is we will say opening balance or balance brought down. It has to start on the debit side. Am I making sense?
Yes, I understand.
So the same would apply as if you're dealing with an income or the liabilities or the equity. The opening balance would always be on the credit side. If you're given the opening balance on the trial balance, that figure should always be on the debit side. Sorry, on the credit side, because we're dealing with the liabilities and so forth, the incomes, the liabilities, and the equities. So, but I think it will be easier if you guys can give me a question, and then we do that question together, despite the questions that I'm going to give you now. So if you give me the specific question that gives you a problem, then we will be able to, I think, tackle it.
From learning unit 2, I struggle from there.
Okay, did you struggle with the theory part or did you struggle with the practical questions?
The practical questions.
Okay, what are those specific practical questions? Because remember, when we are dealing with expense, if you understand the principles, when you deal with one question or one transaction, you won't have a problem because they're all relatable. They're all treated the same. Let's say, for example, we've got a list of expenses that are quite a lot. Let's say we're dealing with credit losses, for example.
Okay.
According to the principles, the treatment of the credit loss will be the same as the treatment of the depreciation. because it's an expense. However, the effect might be on how was the additional information given out. I think that's where you have to get the point.
Okay, sir.
What I'm trying to say is, if you are given a list of transactions under your trial balance, all the expenses under that kind of a list, they are going to be debited initially. You're going to have your opening balances balance brought down on that date on the debit side. There's no way you can say credit loss is an expense. It will start on the credit side, and then depreciation is also an expense. It will start on the debit side. No, they have to be treated the same. The only thing that is going to differentiate that is the additional information that is given per list of those transactions or expenses.
I hear you, sir.
Do you get what I'm saying? All right. I've got a question here which says that Putty Limited with the year ended 31st December 2022 has the following transactions to be recorded, and he is also a VAT vendor. Transaction number 1 says that it's unfortunate I don't have a trial balance in here, but this would just come up as part of your additional information. It says that Putty has contributed 50,000 Rand as a contribution. Okay, so first thing that you must do, you just have to highlight the question, and then let me just put it in red. Come on, all right. Just gonna make it bigger. So the contribution part from the owner himself, let me just see. Let me change colors here. All right, let me just do this. All right, it's blue. And because I'm trying to actually just put it in purple. So it's not as yet. I'll show you what I'm trying to explain here. Okay. All right. So you can see that on transaction number 1, I've got different kinds of colors highlighted on that transaction. So we've got Putty, who is actually the owner. Putty is actually here, and I started a business which is called Putty Limited, for example. And then when I started the business, I contributed an amount of 50,000 Rand towards the business. So depending on what you are actually required to do, let's have a look at what are the requirements here. I'm just going to upsize this so that everybody can just see. All right, the question says that all the applicable journals, and then you need to reconcile the VAT control account. The reason why you're reconciling the VAT control account is because this person is a VAT vendor. It's come up here. Definitely, you are charging your clients VAT because you are a VAT vendor. So this contribution is going towards Putty Limited business. If we were to do, let's say, capital as a contribution of this. Okay, I'm not going to show the T accounts there. So if we were going to show this now, it means that we were going to have capital. Remember, capital is an equity. Then I would just say credit with an amount of how much? 50,000 Rand. Let's see, 50,000 Rands. Okay, and then the other one will be the bank. Bank, it's my bank as the business owner, Putty Limited, right? And then you close it underneath, and then you debit that. Let's say you put that as a debit, and then you put the 50,000 Rand. Okay, so there's a cross-reference in between these two here. So meaning that at the end of the day, we're going to have a zero balance in between the bank and the capital. So that's what we're talking about when we talk about the, what do you call the thing? Double entry system. It can't, when you're applying the double entry system, you can't have only one transaction. Let's say you can't just close it as bank and leave it like that. You can't move with one leg. You need the second leg to move on. But the second leg, it will be what is actually affected. So we know that is the bank. And bank is an asset. It increases on which side? The credit side. Then you put your 50,000 Rands in here, just to show that it's actually, I think I made a mistake by saying it's increasing on the credit side. It's increasing on the debit side. That's why you have it here. I think this should actually help out Bongi a lot.
Yes, sir. Thank you.
Does it make sense?
It does, sir. Thank you so much.
All right, thank you. And Noma Wazi, I think you are also sorted on this one as well.
Yes, now I'm following. Yeah.
Are you following?
Yeah.
No other problem. What are you doing to the baby now? What are you doing to the baby? All right.
Thank you, everyone.
So before I go on. Are there any questions that you want me to clarify on? If you were looking for the questions in your study guide, please do make sure that you bring me that question so that we can tackle it in whatever the format or whatever the required part it is. Then we can do that. Is there any questions?
No, sir.
No questions. Can I move on?
Yes, please.
Okay, now let me just start in here. I think I must just have an Excel spreadsheet to do the required part. Right, just a moment. All right, I would like us to actually do this now. Let's read the questions. And all right, let's come here now. Let's look at the required part. The first one, it says the applicable journals, right? So your applicable journals might be basically, let's just say all of them, which is your cash receipts journal, cash payments journal, purchases journal, sales journal, and the returns on the general journal on that one. So this is what I want, because this is a starting point of these transactions. So usually, you remember that accounting cycle that I think I sent you guys the notes. If you look at the accounting cycle, this is the first or second part where we have to start. So the first one under the journal, I think I've explained this. Puti has contributed 50,000 Rand as part of the contribution. Let's try and identify this as part of the journal. In terms of the journal, I'm asking you now, where do you think this would go? In terms of the subsidiary books, where do you think this transaction would be affected?
Can I say cash receipt journal?
The CRJ, right? Thank you. Then this is what you just do. As soon as you've identified that, you just do it, you just put it in the brackets, and then you come to the second one. So Puti Limited has paid the City of Johannesburg for the water and lights with an amount of 4,100 Rand. Where do you think this would go?
CPJ.
CPJ. And there was a cash sale of the merchandise with an amount of 5,000 Rand. Where do you think this would go?
A sales journal.
Sales journal. Okay, let me just go back to Teams. Right, who said cash sales journal?
Cash receipt. Sorry. Cash receipt journal.
Cash receipt journal. You're right. CRJ.
Because it's a cash sale.
It's a cash sale. Right. So Standard Charter was actually paid by account with an amount of 3,600 Rand. Where would you think this would go? Where do you think this would go?
Is it not CPJ?
It is CPJ, yes. CPJ. Right. And there was a discount received of 300 Rand.
Isn't it this discount? No, it's not discount allowed. The discount received.
Is it not in the same journal?
I beg your pardon?
Is it not going to the same journal where the cash payment will be?
Is it not the CPJ?
Yes, I'm asking.
Okay, so who said that?
It's a question I'm asking.
I was asking you actually.
Well, I don't know.
That's why I need an answer from you. All right, so it's going to be a CPJ, right? CPJ. But you see, these are the kind of basics that you need to familiarize yourself with, because if you don't know these basics, you're gonna have a problem with doing your financial statements. And why am I saying that is because you'll see when we actually display our CRJ and CPJ. All right. So let's have a look at the transaction number 5. There was a cash sale with an amount of 4,120 CRJ, right? It's a CRJ, right? Cash sale with an amount of. Do you guys agree with me?
Yes.
Yeah.
Okay, so there was a settlement discount, so it's going to be the same thing. Okay, and then look at transaction number 6. It says purchased merchandise on credit from Pluscon Limited with an amount of 9,000 rand. I beg your pardon?
Purchase.
Sorry, can you speak a bit louder, please?
Purchase journal.
Purchase is general. Then why do you say purchase is general?
Because it's a purchase on credit.
It was purchased on. This is the key issue. The factor is here, right? It was purchased on credit. So the cash sales, they're all going to your CRJ because they're all cash. Makes sense? Right, let's have a look at purchases journal, PJ. So, right, inventory to the value of 14,000 rand was sold to Dr. D. I think this question is actually not clear. Let me just say for credit. Where do you think this goes?
Will be a sales journal.
Sales journal. Right. So look at this. We are purchasing and we are selling. Okay. So it's two different ways in terms of directions. Right. So let's have a look at transaction number 8. Inventory to the value of 5,200 rand was purchased from Minota Stationery. Okay. Let me just say. I think I don't know what got into my mind here. So the purchase is general. Okay. Because it was purchased on credit. So there's a purchase and there's also there's a credit as well as the purchase. Okay, there we go. Goods to the value of 3,100 rand was returned to Pluscon. So I think it's what we actually have purchased before on transaction number 6. So the value of 3,000 rand on the goods have been returned back. Okay, so which journal is affected here?
Purchases returns.
The purchases returns journal. Okay. Okay. Let's see, it's PRJ. Dr. B has realized that some of the item purchased from Poti Limited has been defected and overdue. It was returned back to the owner with the value of 3,000 rand. Right. So remember, we sold this to Dr. B, Dr. D, sorry, initially. And now Dr. D is not happy with our goods that we've sold through to him. And he's actually making a return of those goods. What is that?
Sales returns.
Sales returns, you know, sorry. Yes. Right, the required part here says that, so every time when you are given a transaction, make sure that you look at the required. After looking at the required, you look at where does it go as part of the required, and then be able to sort it out. Then without any waste of time, let's see, we'll just say cash receipts journal. A moment. cash receipts journal. We go down, we're going to have payments. Payments journal. We're going to have purchases journal. We're going down to have the sales journal. Let's see if we got the fourth one, the general journal. Journal. And we're going to have the purchases for payments. Journal. Going to have the sales for journal. Let's see, under the cash receipts journal there, we have to create different types of columns. Okay, so I'm not sure whether you are, but because this is just for your knowledge, obviously you might not have something like to know which one goes where and stuff like that, but let's see. Trying to watch it. Okay, let's say you've got your details here for the column, then you're going to have your bank. You're going to have your sales, and you're going to have debtors, and you're going to have the discounts, discounts, you're going to have that output. Can we just say you're going to have batch, input, output. You're going to have the sundries. I'm just going to put it somewhere a bit far from. Right, so let me explain something about the sundries. Sundries, it's when you've got a transaction that doesn't fit to be in any of this. It means that if it's a receipt, but it's going to fall under your sundries here. So under your sundries, you actually have your amount, and you're going to have the folio, which is important. You're going to have your folio, and then you're going to have your details. The details you just have to explain as to why are you moving it towards your sundries. Right. So
Yeah,
cash payments.
that's a bit of where I was getting confused, because some of these transactions that didn't fall in any of these journals, instead of going to the general journal, you will find it in the sundries of maybe the cash receipt journal or the cash payment journal. So I wanted to understand, how do we recognize the sundries and the ones that go to the general journal? That was my initial question.
But are you clear now? Do you want me to explain it again?
You explained for the general journal. You didn't
Yes.
explain about the sundries. So I'm asking about the distinction between the sundries and the general journal.
Okay, no, I get you. All right. So in terms of the journal, let's say the transaction fits to be in, it doesn't fit to be in any other of the journals. All right. I just want you to identify the difference. It doesn't fit to be in any of the journals that are written down in here. That's when you're going to put it under your general journal. However, if it fits to be under any of these journals in here, particularly the cash receipts and the cash payments, but we don't have a column for it, for example, then you just move it to the sundries. All right, you've got a transaction that doesn't fit in any of these journals. Let's just be specific about the cash receipts and the cash payments. or let me just say inclusive of, okay, including every journal here. You've got a transaction that doesn't fit to be recorded under any of these journals. Okay. And then you need to open up what's called the general journal for that specific transaction. Okay, that's general journal. However, you've got a transaction that fits to be in one of the specific journals, but we don't have a column for it. A column, I'm talking about the discount granted or the debtors and all of those. It will come in here, but you have to disclose it under the Sundries. I think you will see it with the capital, for example. I think you've got a transaction under the capital there. You will see it.
Yes.
Okay. Okay. I hope you guys, you remember the first transactions that we spoke about? That says Pooty Limited contributed 50,000 Rand as a contribution. Do you guys still remember that?
Yes.
We have identified that as an item that goes through to our cash receipts journal, didn't we? So when you record that under your cash receipts journal, you just say Pooty Limited, for example. See, you go Pooty Limited. But under the bank, because my business is actually receiving that amount of money, which is 50,000 Rand, and then you put it in here. All right, cool. Remember we talk about the double entry system, okay? So we've got bank, but we haven't identified the other leg of the capital. And we go to the columns here, we've got sales, we've got debtors, we've got the discounts, we've got the VAT input and output, and then we've got the sundries. However, we don't have the capital as a column here. Okay, on transaction number one, we had Pooty is contributing 50,000 Rand to his business. So under the bank of the business, we've got 50,000 Rand, but we still need a column for the capital. We don't have that. Okay, then what do you do with that? So let's say I'm just going to delete this amount here and say, let me just put the amount here and then leave the folio out because it's not even necessary. Okay, let's say you put the capital here. Capital. There was no need for us to actually go to the sundries because there's a column for the capital. I'm just trying to differentiate between what we don't have as part of the column under the book analysis and the general journal. If we had the capital as a column in here, then we're going to put 50,000 Rand in here. But we don't have it. Okay, so it's important. I'm going to advise you now, go back and look at the framework for your cash book analysis and see what kind of columns you can create and what you cannot create. And then you need to give us the reason why are you putting it in under the sundries. Your reason is easy. You just say capital and then you are sorted. Let me go back to question number 2. Question number 2 says that Pooty Limited paid the city of Tshwane for water and lines with an amount of 4,100 Rand. Remember, we have identified that transaction as a CPJ. Do you all remember that?
Yes, we do.
Yes.
Okay, no, it's fine. And let me go back to, I'm going to put the columns that doesn't match, the columns for the CPJ that doesn't match with the receipts because of the slowest of my, what do you call it? The slowest of my PC. All right. So here you're going to have bank. Let me just do it this way. Bank. And then you're going to have purchases. Okay, cool. Purchases. And then you're going to have trade payables. Well, trade payables is actually the same as, is the actually opposite of trade debtors, right? So you can just say, trade payables. And then you're going to have the discount. Okay, so the trade payables, you're going to have wages and the other stuff. Or let me just put discount because we don't have any transaction that relates to discount. Okay, we've got the granted here. It means that we're going to do the received. Right, can somebody tell me why do you have the discount granted under the CRJ and then why do we have the discount received under the CPJ? Can somebody tell me why don't we have the discount received under the CRJ? Why is it under the CPJ?
Putty Limited as a business would be in the position of receiving the discount. So if
Yes.
someone grants Putty Limited a discount, then that's where we would show the entry. However, if
Thank you very
Putty is the one who grants the yeah, something there. Okay.
Okay. All right. The reason why we have, thank you so much for that explanation. I think it's quite clear. The reason why we have the granted under the CRJ is because when somebody is paying you, let's say they pay you before the agreed date, then you're granting them a discount. That's the reason why the column for the granted is actually under the CRJ. So the same opposite way under the CPJ, when you are actually paying your creditors before the agreed date, we are going to grant you the discount. In reverse, it's going to be the discount receipt because you are receiving a discount from your creditors. I hope that makes sense. But anyway, we are paying the City of Johannesburg for the water and lights. We are paying the City of Joburg for the water and lights, and then we can just simply come here and say the details. City of Joburg. Let me just say AHB City. Okay. Or you can just say the water and lights, and then how much are you paying for the water and lights there? How much are you paying for the water and lights? Okay, so I think I promised me it's 4,100 rand. Okay, so you are actually going to have 4,100 rand. Remember, this person, Putty Limited, it's a vet vendor, so there should be a tax attached to that one for that. I don't know if that makes sense. So that means for whatever that you're paying, you need to actually be charged that. So that will be 4,100 multiplied by 15 divided by 115. So that means that your VAT input, because it's the money is actually going out. That's why it goes through to our VAT input. At 534, then we can round it off to 534, 535 because it's 534.7. So you just say 535. Okay. So quickly, and let me just remove this Sundries here, and I can put the amount here, the details here. These details, and this is this. Then how much will be for the? How much is the difference? Somebody quickly help me. 4,100 minus 535. How much is it?
3,565.
3,565. Okay, this is the amount here. Remember, we don't have the column for the water and lights in here, so we bring it under Sundries here, and then we're going to say water and electricity or lights. You can call it whatever that you want to call it. Okay. Are we clear on this part?
Yeah.
Okay. Then the third transaction says that there's a cash sale within a cash sale of a merchandise for an amount of 5,000, right? So this is your CRJ transaction. We have identified that. So it can just be cash sale. Your description, and the amount will be how much? Let me just check quickly. Mistake. It's 5,000 rand. So the bank would have an amount of 5,000, and then we still have to pay VAT for that one. But can somebody tell me, is it a VAT input or is it a VAT output? Anybody with an idea? And you have to tell me why are you saying that it's an output or why are you saying it's an input?
Input.
It's a VAT input.
No, sorry. It's output.
Is it an output VAT?
Yes, because I think output VAT is when we sell goods or services.
That's correct. When we are selling goods and receiving the money, obviously you're going to be liable for an output VAT there. So I've calculated that. That's correct. And then you're going to have an amount of 652. And then you're done with that. And then you're going to look at the difference between 5,000 minus 652. Then that's going to fall under your sale because the cash sale 4,3. So it doesn't create a difference. Can you see that we've got a cash sale column in here, but we don't have any sundries in here simply because we've got this. Make sense?
Yes.
All right, thank you very much. Then let me move on to transaction number 4. So we paid Standard Charter an amount of 3,600 rand. So we identify that as a CPJ. We've also been granted the discount with an amount of 300 rand. So that means we're going to go through under our CPJ, and then we'll say Standard Charter. Don't freeze, please. Okay. Standard Charter. Right, and the amount is how much? Quickly, anybody with an idea?
We don't have the question, so I'm not sure where you're supposed to get the amount from.
No, the question says that Putti Limited has paid Standard Charter an amount of 4,100 rand.
4,000?
4,100 rand.
4,000 will go under bank.
4,000 would go under bank. You say 4,000 under bank? It's 4,000. Let me just.
Is it 4,000? I can't see the question. Is it 4,500 or 4,000? But
It's 600 rand. My apologies.
Is it 4.1 or 4.5?
It's 3,600 rand. My apologies. I think I made a mistake there. Somebody was trying to answer me. Paid is transaction number 4. Paid Standard Charter and with an account for an amount of 3,600 rand. Right. Somebody was trying to help me on how can I record this.
Maybe put 3.6 under bank, and then calculate the VAT. I'm sorry, we're experiencing load shedding, so my network is bad. And then put amount before VAT under trade payables, and then
okay. Just bear with me. Is it how much is it on the bank?
3.6.
Okay, 3.6.
And then 3.6 divided by 1.5, put it under trade payables.
Sorry, you said 3.6 divided by?
1.5, I mean 15%.
Or is it times 5 divided by 115?
Yes, and then.
All right, let me help you now. But she's right by saying 3.6 in the bank. Okay. And you're now going to look at how much was the original amount that we owed our suppliers. So meaning that we're going to say 3.6. And then how much is the discount? The discount is an amount of 300 rand. So 3.6 plus 300 rand is how much? 3.9, right? So under your payables, you're going to have a total amount of 3,900 rands. Can you all see that?
Yeah.
All right. So, but we still have to, because remember, we can't go through to our sundries in here, simply because we've got a column for the trade and other payables control account. But we still need to record the discounts that we have received for early payment. Okay, so what do you do in that case? You take the total amount of your, remember we've got a settlement discount received in here, right? Let's go to the question now. The question says that the discount received is 300 rand. So this is easy. What you just have to do is 300 rand. You still need to tax this person for the discount, all right? So you say 300 multiplied by 15 divided by 115, and then you will be 39 rands of your discount. So the difference would be under your settlement discount. So this is how you're going to record it. You're going to say is it VAT output or VAT input? Remember that's a discount. Right. So the discount is more like you are receiving. So that's why you have to record that under your what do you call it? The output VAT with an amount of 39 rand. And then the difference between 300 and 39 rand is how much? 251, right? Or 61. Yes, it's 261. Then it's going to come here. Did you all get that part? Because I know the discount part is actually confusing a lot of people. Did you all get it? Right.
No, sir.
Can I explain it again?
Yes, please.
Right. Let's go back. Let me explain it while we go back to our transaction 4. I hope, Catherine, you're online. I just want to engage you on something just before I go ahead after transaction number 5. All right, transaction 4 says that Putin Limited paid Standard Charter on an account for an amount of 3,600 rand. Okay. So if you look at this transaction, you would recognize or realize that Standard Charter is actually a creditor of Putin Limited. So we made a payment. It's more like a settlement of 3,600 rand. Okay. So we recognize this to be a CPJ transaction. And then we had bank, which is the total amount of money that went out, is 3,600 rand. Okay. However, under the trade and other payables control account, remember that is the original amount where you have to add the 3,600 rand plus 300 rand. Initially, we owed Standard Charter 3.9. It says that they discounted us an amount of 300 rand because of the 80 payment that we are making. That's why there's a split. So you're going to say the bank, because out of the bank in the CPJ is 3,600 rand that we are paying, right? So under the bank, you're going to have 3,600 rand, okay? But under the trade and other payables, because we need to show how much was the original amount or the initial amount, then we're going to have 3,900 rand under the bank. However, we still need to account for the discount that we have received under the same cash book analysis. So we have received the discount with an amount of 300 rand, and then we still need to show how much of the VAT it is actually in there. So the tricky part will be, okay, I have to show my VAT, but what kind of a VAT is it? Is it an input or is it an output? So we've recognized that should be an output because it's more like we are receiving the money.
Because, sorry?
It's more like we are receiving the money. We're no longer paying the full 3.9, but we're paying 3.6. So that's an income towards the business. The 300 rand is actually an income towards our business. I'm going to explain that again. I know it's actually not clear. Sure. We've identified that Standard Charter. It's actually one of our creators. Later in the year, we've decided that we are paying Standard Charter. And the recognition comes as we are paying him or before time. Right. Let's say we were supposed to pay by the 31st of December, then we decided to pay in June this year, right? So, and then we've discovered that we owe Standard Charter 3,900 rand. And then Standard Charter says, no, because you're paying me early, I'm going to give you 300 rand discount. Let's get the split there. Okay. So because we are paying early, we're no longer paying 3.9, we pay 3.6. So that means the 300 rand is going to be allocated through to a discount that it has been received. So this is what you have to know. The 300 rand is going to be seen as an income to the business because we're no longer spending. We are getting a discount. We're no longer spending 3.9, we're spending 3.6. Am I making sense?
Yeah.
Okay. So okay, please go ahead.
No, sir. I was trying to ask. So basically, what you're saying is that a discount received is treated as income, and therefore VAT it goes on to VAT as output, and then for a discount granted, then VAT is treated as input because it's an expense.
The received one is treated as an income. It's treated as an income. That's why it's affecting your output. Yes. Let me bring a practical example for you just now. You go to Woolworths, right? They say you go to Woolworths with a budget of 50 rands. When you go there, let's say you want to buy milk, and your intention is actually, it's not a creator thing, it's just a cash transaction relationship. Your intention is to spend the entire 50 rand because you saw the price of milk being 50 rands, right? So when you get there, they say, no, 6 liters of milk is about 40 bucks. Okay, meaning that you're no longer going to spend 50 rands, you're going to spend 40 rands. So that 10 rand is going to be an income to you as a person, but you'll be able to use that on your own for whatever the reason that you might say for. So it's the same as in here. We owe Standard Chartered 3,900 rand. Standard Chartered says, no, instead of you paying me in December, you are actually paying me in June. I'm going to give you a discount of 300 rand for 3.9. That's a discount received. So that's actually a save. Let me just put it that way. It's a save for Pooty Limited. We're saving 300 rand by paying early. So it's going to be seen as an income for the business because we're no longer expending the entire 3.9. So, okay, let me go back to the recording part. The recording part says that, okay, we've got a bank and then we've got the trade payables. So we don't need this. We don't need this person because we've got 2 columns in here, which is the bank and the trade payables. If we didn't have this person, we were going to need this person to actually carry the second leg. So the bank, this is what we are paying to Standard Chartered, 3.6. Okay. However, the total amount that we owed this person is 3.9, which is here. That's 3.6 plus 300 rand of a discount. Does it make sense? But in terms of the standards, we say, no. This is not where we end. How about, why don't we record the discount that we have received? We still need to show that. That's why we have it here. Okay. So the discount that we have received is 300 rand. However, we've got an output VAT that we are liable for of 39 rand. Remember, this guy is a VAT vendor. He falls here. That's why you see that. Is it making sense?
Yes,
This part is actually the one that is making this person to pay that 15%. That's why you see this kind of a split.
Okay, because I was also getting confused to say, but if we are paying somebody that we owed, why are we charging that? But okay, I see now it's because he is a vet vendor.
Because it's a vet, that's the reason why. So you need to be very careful when it comes to the vet vendor or the non-vet vendor. It's the same as you need to be very careful when you're dealing with the inventory system. You remember the perpetual inventory system and the periodic. That's how they are going to confuse you. Let me tell you something. Prepare yourself now before you write your final assignment or whatever, because those kind of systems will always come up in some of the questions somehow. And they're trying to just confuse you as to whether you understand whether it's the actual inventory or whether we apply the purchases. You need to know those two. So same applies in here. If this person was actually not a vet vendor, if this person was actually not here, we were not going to have these columns. We were not going to have these columns at all. These 2 columns. These columns were not going to be here. They're here simply because of I'm a vet vendor. I'm registered for VAT. I need to show my VAT applications on my statements or the journals. Okay, here's my assignment to you now. Please do this in my WhatsApp number. Do this thing on your own. And then look at the subsidiary journals questions in your study guide. Try to actually match them if they do work together, and try to bring the principles back as and when we're doing that. Should you not get it right, please do not hesitate to contact me. I'm begging you, please. Make sure. Because I know your last assignment of number 6 or number 5, they're actually going to consolidate the entire content of your FAC 1502. So meaning that part of the questions that you did in assignment 1 and 2, they're going to do there as part of the principles in your assignment 5 or 6. Don't make that kind of a mistake. Okay. So unfortunately, they no longer given the same way as students before they were given assignments like you need to be paying 2 months time and stuff like that. Now it's an instant rapport where you have to do it like in 2 hours or 1 hour 15 minutes or whatever the time it is. You understand? All I know is you are given 2 attempts, and should you fail to actually prove yourself in the 2, because you get your results immediately, as much as I remember. So you know whether you've failed or you've passed. It's no longer the same as where you have to scratch your marking sheet and send it through to the main campus, they scan it and give you the result. The process is no longer the same. It's quicker now.
I'm not sure if I missed that part, but were we not going to pay a VAT on the amount that we owe, the 3.6 or 3? The other VAT amount, I'm not sure if I missed that part.
The 3.6.
Yes.
It's already accounted for.
Where?
It's already accounted for in the 3.9 and the trade payables control account.
So we don't capture the part of the VAT anywhere in the cash journal at this point.
I'm not sure if I do follow you.
No, I thought we were going to pay an amount of VAT on the amount that we were owing, 3.6.
Oh, basically you thought we would say 3.6 and then it would show the VAT input.
Yes.
No, it's already, remember, this is a transaction that has happened already. You initiated the account. You've initiated the what is it, the contract already with Standard Charter, and you actually now pay, because already the assumption it's already determined in that amount, so you don't have to show it.
Okay, let's say for example, so the initial, let's say the initial transaction was maybe a purchase on credit.
Yes.
And now we are paying them. So when we capture the credit purchase, the VAT was already included there, so we don't have to pay for it here.
I think you understand it way much better than me. So initially what happened here is, because remember it was a credit transaction before, the assumption it will be it has been recorded under the purchases journal already, because it's a credit transaction. So when you record that already automatically, it means that you have accounted your VAT output already. Is it input, output, input, sorry. Under your purchases journal, not under the CPJ.
Yes.
Can you see where this transaction is coming from? So I bought goods on credit from Standard Charter already. Remember now it's a CPJ because we are paying them. But the assumption will be under the purchases journal because it's a credit transaction. The VAT input has already been charged.
Oh,
so if you show it under the CPJ, it will be what's called the double counting.
Oh, it's clear.
Is it clear now?
Yeah.
Okay. All right, let's have a look at transaction number 5. I hope everybody's back, right?
Yes, sir.
Everybody back? All right, no problem. Transaction number 5 says that there was a cash sale with an amount of 4,120. We have identified that as our cash receipts journal. Let's look at the recording part of it. The recording part will be cash sale as part of your description. So let me just have a look at the amount. This is 4,120, and then you just put here as 4,120, and then you do. Let me just quickly calculate that. Okay, let's see, 4120 multiplied by 15 divided by 115. Then our VAT output will be 53. I'm going to round it off. Oh, sorry, it's 537 only. And then you say 537. My apologies. 537 minus 4120 is 335. That will fall under our sales. Let's see, 358. Can I move on? I will all clear on this part. All right, means that this has a settlement discount received the settlement discount. We're now granting the client the settlement amount of the VAT. Then of the discount received. What do we do here? What do we do here? It's easy. You just say 400 multiplied by 15 divided by 115. You're now going to have under. It's now going to switch to an input. Let me see. It's now going to switch to an input with an amount of how much? 52 rands. And then you'd say 52 rands minus, am I doing the right thing? 300 rand. Yes. And then you'd say my granted is 248. Then we move on. Right. Everybody clear on that? All right, there we go. Let's have a look at transaction number 6. It says that there was a purchase of merchandise on credit from Plascon Limited with an amount of 9,000 rands. We identify that as the purchases journal. All right, sure. Then we go to our spreadsheet, and then we're going to look at where the purchases journal is. Purchases journal here is. All right, we'll just assume that this is actually the details column. Let me just put it that way. And then you'll say Plascon Limited. And what are the other columns that you're going to have under your purchases journal? You should have creditors. You have the VAT. It attracts the VAT input, right? And then you're going to have purchases. Okay. So it means that you're going to have creditors. You're going to have VAT input. You're going to have purchases. And how do you record that? Recording will be in this way. Sorry, I think I moved to the wrong side of the sheet. So the recording will be 9,000 rand as your trade and other payables. So our creditors will be 9,000, and my VAT input, it will be 9,000 multiplied by 15 divided by 115. Let me just see that how much is it. Multiplied by 15 divided by 115. I've got my VAT input with an amount of 11, and then the difference 9,000 minus 1174. That would go under my purchases. So it means that the purchases without the VAT, it was an amount of 7826. Makes sense? My people do understand. Let's look at page number 12. Inventories to the value of 5,200 rand was purchased from Minolta Stationery. Inventories to the value of 5,200 rand was purchased from Minolta Stationery with an amount of 5,200. All right. So it says that the inventory to the value of 14,000 rand was sold to Dr. B on credit. We identified that as a sales journal. And sure, we just go through to our sales journal here, and then you will see Dr. B. The details will be the same. But can we just say details so that everybody can just be clear with that? And then you're going to have, I think it's debtors. Debtors. And you're going to have that. We know that it attracts the output back out, and here you're going to have sales. Okay. Sorry about that. Let me just say sales. And then we're going to have a look at the question quickly again, just to verify. It's 14,000 rand. So we're going to say the initial amount is 14,000 rand. And who is our debtor? Dr. B, right? Is Dr. D, sorry. And we're going to say how much is VAT of 14%. So it's easy, you just say 14,000, and then you multiply this by 15, and then you divide this by 15, and then he's giving me 1826. This will be my VAT. 1826, and then you would say 14,000 minus 1826, and this will be my sales with an amount of 12,174. I think it's easier, right? I think it's easy. Okay, let's see. Let's have a look at another question. Sorry, my my Excel has just disappeared. Okay, it's back. Well, let's have a look at the let's have a look at transaction number 8. It says inventory to the value of 5,000 Rand was purchased from Minolta Stationery. Okay, I think here was supposed to say on print. Then you would say under the purchases journal, then say Minolta Stationery is purchases journal. You come here, Minolta Stationery. What this one? What this would be from? How much the amount? 5,200 Rand. Then that is 5,200 Rand, and then you're going to look at the VAT into the 5,200 Rand, and so it's also easy. You just say 5,200 multiplied by 15. You divide this by 15, and then my VAT here is 678. So you're going to say 678 minus 5,200. So it's 4,522. 4,522. Everybody happy? You'll just go ahead if you're actually not happy. But let's have a look at transaction number 13. This should be 80,000 Rand was returned to Plasco. Let me see, we had Plasco. Again, the goods that are actually purchased from this person are returns. Which is returns here now. So description will be Plasco Limited. Plasco Limited. So this, I made a mistake. Details. Creditors. Because and then once they ask him this time around, then you have, let me just verify that. At input, you have these hands. ZDR as well. Plus limited. How much was the amount of the goods returns? Okay, let's go to look at our sheet 1. It's 3,100 Rand. So you take 3.1 creditor, and then you put 3.1 by 3.1 multiplied by 15 divided by 115. So your VAT would be 404. Okay, round it off there, and then you would say 3.1 minus 404, and then you put 2696. That's your and it is let's have a look at the last transaction here. So let's see. The last transaction here says Dr. B has realized purchase from Pucci Limited has been defected and overdue. It was returned back to the owner with an amount of 3,000 Rand. So we have identified that as sales returns journal. Then you're going to say my description under the sales return journal. Yes. Sorry. test to have that to have returns sales. Okay. So our detail will be the then the test amount, I think it's not, if I'm mistaken, 3,000 rands. And then the VAT output is going to be 3,000 rand multiplied by 15 divided by 115. So it means that you're going to say 3,000 multiplied by 15 divided by 115 is 3,911. Then we're going to look at the sales return, which is 3,000 minus 391. Then you go 2609. If we can look at our work, this is the part that we missed. Unfortunately, I forgot to put the relevant transaction. Let's say I'm just going to pick up the transaction quickly. Let me just go to my notes and go to the, for example, here we just say number 14. We just say, let's say we purchased furniture on credit for office use. A part of inventory has been trade, 60,000 rands. So this is when we realize or recognize that this transaction doesn't fit in any of the journals. And let me just raise it a bit. Then you just say under your general journal, where's my sheet one? Okay, general. So remember, your journal would only consist of your debit and your credit. So the bigger question will be on how do you record that. Let me have a look at my notes quickly. So here it will be, let's say furniture, our description, and the amount is how much? 40,000. And we still have to include our, it's a purchase, it's going to attract our VAT input. And then we're going to say VAT input, which is 40,000 or 50%. So you just say 40,000 multiplied by 15 divided by 115. It's 5. It's 5217, and you're going to have creditors an amount of 40,000 plus 5. You made a mistake here. This is not supposed to be here. Okay. 5217, and it's 45,000. We come this side. 217. 217. That's it. So this is how it goes now. Then you're going to have, okay, let's add up these things together, meaning that we're going to have, we're adding them together now because we remember we still need to reconcile. Oh, it's 5,000 plus 50,000, 5,000 plus 50,000 plus 4120. Right, so your total will be 59,120. Here, your total will be 4348. You plus it with 3583. Your total is 7931. Right, and here the total will be 248,852. Here is 652 plus 537, 1189, 1189, 1189. So these are your totals, and then you can just simply highlight them like this, and then you put your bold, and then you align them. So these are your actual totals for your cash receipts. So the cash payments here, it should be 7,700. 7,700. 9, 2, 6, 1, 535. Just add them, and then you underline them just to show that they are your totals. And here, how much is 5 and 9? It should be 14,200. 14,200. And 174. It's 1174 plus 1174 plus 678. You've got 1185. 1185. We have 7826 plus 4522. Then you're going to have 12,348. It's 12,438. Okay, and then you still do the same thing again. Highlight, make sure that they are actually on your totals. Here, your totals will be like this. They won't change. Just highlight, make them the way. Here, obviously, it's going to be the same. So the same as here. Then you just highlight and underline, make it a different color, and then it's going to be the same here. And then you do the same thing, give it a color, and you've got your totals. Okay, that's 5,000. The Sundries. 36, but they're not gonna. All right, cool. Then let's see. I'm just going to say that input. And I go down and say that output. Output. Fine. And then I go down. Now I say that control. And control accounts. Okay. So the debit here. DR. CR. Sorry, I can't plug my major account now. C accounts actually. It's going to show it this way. Then CR. Okay. And you have your debit. You have your credit. Okay. Sure.
Sorry, Puti, can you display what you are doing now?
Just to show the down. So go like this. Okay. This is then the VAT output. And you need to tell your output is expenditure increase on the debit side. So this is how you start. The balance brought down. Oh, you can't see it.
Now we
Appearing now.
yeah, we couldn't see earlier.
Yep.
Now we can.
Hello.
Yes, we can see it now. We can see it now, sir.
You can hear. Is it better? Okay, no. So your balance brought down, it will be a 0. You're not given anything, and then the incomes, the VAT output represent your incomes actually. The VAT output, then you just say balance brought down. and then you're going to have a 0. Remember, we're not given anything concerning the trial line. Okay, then we're now going to have, let's look at all the input under your, okay, we've got 52 rands, and then we've got 535. Okay, wait. Under the input there, you're going to have, okay, let me just do it this way. You just say CRJ with an amount of 52 rands. Then you've got your CPJ. That input under the CPJ is, you just say, this is how you abbreviate it. Okay, let's see, 52 rands. And then here you're going to have what's called 535. Take 535. And let's look at if we've got another input. Right? Okay, this one is the output. And then we've got the sales. Let's see, I think it's the sales. Sales. Yes, purchases general. Okay, then you just say PJ. Shell 115. And you've got general, just a GJ. And back here is looking for my general channel. It's 5217. 5217. And then you have I think it's the purchases returns general. Purchases returns general 404. Let me just put it here. 404. Okay, so you can just say PRJ. Okay. So you are now going to deal with, I beg your pardon? Hello? I thought somebody's talking. Okay, our balance brought down is actually a 0. And we're now going to look at our, do we have any under the CRJ? Then you just say CRJ. We've got a CRJ. We've got an output amount of 1189. Okay, and then we've got CPJ with an output amount of 89. Okay, and we've got no purchases journal, sales journal. Okay, we're going to have SJ, for 1826. 1826. And we have, let's see, something here. SRJ. SRJ. SRJ 391. I think, where is my general? This must be not here. 5217. It should come this side, sorry. 5217. Let's say GJ. I forgot to let's say prioritize GJ, prioritize. All right, then you are basically going to add them together. You would say 55253, and then you're going to minus this. Okay, let me just do it quickly for you. Say 52 plus 535 5. So your total here will be 1172. And I don't have a space. Sorry, guys. I will not have a space. I need to now. Because why I'm so confused is because my credits. Oh, that's fine. Let's just do it. Save. Yeah, okay. And I delete this one. There. I can see that my credit side is more weight than my debit side. Then you just say 1172 minus, because the total will be 5217. And then we can balance it off again in here, 5217. And then you say minus 172 minus 5217. So for my balance carried down, which is opening balance for next year. Balance. Let's do this. Balance carried down. 4045. Okay. Sure. Let's see now. 1189. I'm going to the vet output now. Plus 39 plus 1826 plus 391. So we've got a total balance of 3445. So we have to balance it off again on the side to make it 3445. That's our total. So it's going to be our balance carried down. It will be the same. Say balance carried down. Sorry, 3445. The same amount. So when you come to the vet control, that's where you are reconciling. Then you say vet output. Let me just say output. Output. My output amount is 3445. Where did I take the thing? Okay. 3445. 3445. And on the credit side, I'm going to have 5217. That's my input. And we can see my input is actually greater than my output, meaning that SARS owes me money. So what you just have to do is 5217, then you minus 3445, and then 1772 should be on the side to say that one due about this 1772. Okay. Right, and it means that your total amount will be 5217. 5217. Same applies here, 5217. This is our total. So let's do this. Highlight, underline, done. Right. Any questions?